the key ingredients stay the same, and that is risks. We want to always inform our investors of all the potential risks associated with the transaction, such that they're able to make a knowledgeable, informed decision about not only the merits associated with the transaction, but also the risks associated. We want them to see your business plan. So that's another key ingredient. We want to know, okay, I understand all the risks associated with the transaction, but what are the benefits? Like, what is actually being sold? Where is it located if it's a piece of real property? All of the potential returns or your estimate of what those returns theoretically look like. That's the business plan. So we have risks, we have the business plan. We also want to make sure that it is what the SEC calls suitable for you to invest, because not every deal is a suitable investment. There are certain investments that are only for accredited investors. Accredited investors are typically individuals whose net worth is north of $1 million, backing out the value of their primary residence, or they have made in the last 2 taxable years at least $200,000, or in combination with their spouse, $300,000, with a reasonable expectation of making that in the year in which they invest. If you fall into that category and the offering itself is only for accredited investors, then it might be suitable for you to be able to invest. If your income or your net worth isn't such that you fall into that category of accredited investors, then it would not be suitable for you to invest into that opportunity, right? So that we see risks, right? Business plan, suitability. We have what we call a subscription agreement. That subscription agreement is the legally binding document that basically says the seller who's asking for the money is willing to take this amount of money and sell you X amount of interest in the entity that is being sold. And the buyer's purpose, right? The person listening to the ask for money says, yeah, I've looked at this. I think this is good. It's probably suitable for me. I want to engage in that. And they'll fill out the subscription form and they sign that. And there's money that's exchanged. That's that process of subscription. And then last but not least important, this is one of the most important things, is what is the legally governing document that will exist throughout the life cycle of the investor's position in that entity. And in most cases, that's an operating agreement or a limited partnership agreement or a shareholder agreement. And that really governs what the passive investor, the investor, can expect as far as voting, distributions, sale of the asset, potentially who is governing the entity, all of those things, as well as sale, potential redemption rights, other things like that. Those key things are going to be set forth in that document, because and you should always be able to see that in your private placement memorandum. So those, James, are some of the key ingredients that everyone that's looking at a private placement memorandum, whether you're going to invest or whether you're someone who's trying to put together a deal to get other people to invest into, those are the key ingredients that will be in your PPM as well.